Very good afternoon, everyone. Welcome to yet another uLaw webinar. In today's webinar, we're going to be talking about the trust and general reconciliation, and we're going to talk about how you approach the whole concept of reconciling both your bookkeeping's record with the bank and the whole process of matching these numbers, which really contribute to the reconciliation process. Before I can get started, today's webinar is accredited for 1 hour of CPD credits, of professionalism credits, and I repeat, 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. So for our legal friends, colleagues joining us from these provinces, you are able to log into your respective portals and log 1 hour of CPD credits. The session is also being recorded and as always will be available to you as part of our YouTube channel as early as next week. Okay? So once again, for anyone who has joined us using the computer for your audio, we would kindly request if you could dial in using the phone numbers that have been provided, because we find the audio quality to be way better when you're dialing in using a phone. And if you've done all of that, well, we welcome you to this webinar and hope this is a meaningful 1 hour that we can cover the main concepts of trust and general reconciliation. As in part of your data entry, how do you now take all that effort that you've put in on a daily basis to enter all that information? And the last step of ensuring that you're compliant with the Law Society by doing this task of reconciling both your trust and general accounts. Okay? And the name of the webinar, again, for you to log in into your individual portals will be Trust and General Reconciliation Demystified. So that's the name or the title of today's webinar. All right, so like every other uLaw webinar, today's webinar has a clear-cut agenda. We're going to be talking about the reconciliation process itself. How do you accomplish, or how do you go about doing your trust reconciliation? What does that report look like or document look like? We're going to talk about general reconciliation, some of the nuances of these different reports, the differences, if you will. Once you're reconciled, what are the follow-up documents that you want to keep in mind that enables you or empowers you to be audit ready? As you probably know, if you're someone who's just started legal practice, you're going to be audited by the Law Society within the first 12 to 18 months of you starting your business. If you're a business that's been in the legal industry for a while, if you've not been audited, then there's the chances of you being audited as well. So how can you be proactively ready once you've accomplished these methodical reconciliation steps on a periodic basis? We're going to talk about that. How can you be prepared through a checklist? So we're going to take you through a simple checklist that we offer as part of the uLawPractice platform, where we're going to talk about the checklists that are available to you as part of the Law Society's bookkeeping guidelines, that you can take a printout and have that pinned in your office, or have a printout or a digital copy of it, whatever works best, so that you are well educated or are knowledgeable about what's expected during an audit, the pieces of documents that you need to produce that outline how you've gone about your bookkeeping or your record keeping, okay? And last but not the least, we'll do a demonstration using uLawPractice as a platform today. By no means is this a way of demonstrating the product as such. It's not a sales pitch. It's just a way or a process or a tool that we're going to walk you through. And you can build your own tools if you don't have one. Investigate, do the right research, invest in a good legal accounting practice management software. But for purposes of today's demo, we're going to be looking at uLawPractice as part of the live demo. Okay? Before I get started with the whole reconciliation process, let me just take a minute to walk you through the accounting systems in general, okay, the different types of accounting systems and the evolution of these accounting systems, so you have a better appreciation for what today's day and age offers to you as a legal practitioner. Okay? So from the types of systems, you have the manual double entry, very simple, inexpensive, but it's pretty time consuming given the fact that you have to ensure that you've written down or recorded almost every transaction. There are no automatic posting of ledgers that are important for you for your record keeping. And of course, there's the opportunity for manual arithmetic errors. Okay, so today's title, for someone who's just joined us a bit late, just going to repeat it one time, is Trust and General Reconciliation Demystified. It's 1 hour of CPD credits. Okay. Okay. So manual double entry, we're talking about the evolution as a next step from that to a one write system, as you can see on the screen. This was, again, a little bit more advanced. It was simple and inexpensive. It did post to subledgers, but it did not reduce the amount of time that was required for you to post transactions manually. And the fact that it was done manually, it did lead to arithmetic and any manual errors. So from that to spreadsheet softwares that you're probably used to general accounting software, we've now evolved to a stage of products providing you with legal accounting software. And one step further in today's day and age is being able to offer that legal accounting software that is designed for legal practitioners that manage trust, general accounting, including reconciliation, enables automatic calculations, posting to ledgers, and also producing these documents, audit-ready checklist, financial reports. The one aspect to accounting software was that it was expensive and it required training. Now, today's day and age, with cloud enablement, now that's reduced too. It's commoditized to a point where it's now very much affordable, and training is a combination of what companies provide you in terms of self-training as well as any onboarding sessions that each individual company today offers you. So that's really the evolution from a manual process moving forward towards a software that can pretty much do what is expected out of you as part of these financial documents. So keep that in mind as you do your research and ensure that you're equipped with the right tools to help automate some of these tasks. Saves you time, saves you that time to put back to both life as well as your work. Okay? So let's start with really understanding the reconciliation process, and let's start with the trust account. So simply put, this reconciliation process is an accounting procedure that ensures that you're matching or you're ensuring that the records that you have kept either as a manual system or through this accounting system, right, matches with what's recorded in your bank. If you're working with a bank that offers you digital record keeping, as most of the modern day bank does, TD Canada Trust, CIBC, RBC, Scotia, credit union banks, BMO, the list goes on. So irrespective of who you're working with, they do offer you the opportunity to do digital banking. So really today's legal practitioner is looking to compare the record keeping of his or her bookkeeping software along with the digital banking record that's put in. So before we get into some nuances of it, simply understand that as a legal practitioner, there are many transactions that you and your firm come across. Now, these transactions could be either related to a client, so it could be related to a file, it could be a retainer, it could be invoices for that client, it could be you refunding a retainer, right? It could be moving money from trust to general based on a retainer and an invoice generated. So everything that's related to a file is one set of transactions. Depending on whether the touch point is a trust touch point or whether it's related to your general account is one side of the story. Now, another side of your business where you deal with a lot of transactions is the office expenses. So you as a law firm or a legal firm have continual office expenses to keep the lights on to run your business. right? Such as Law Society expenses, Law Society fees. You may have insurance fees. You may need to purchase a computer or a laptop, paper, marketing costs. There's a lot of expenses that your law firm should incur. Those are transactions that you need to keep a tab of. Ensure that your bookkeeping system has recorded all these transactions. Because let's imagine, when these transactions happen in real life, there are a few areas where it's registered. One, of course, it's registered in your brain. You as the individual are able to appreciate those transactions. But like anything else in life, your memory only serves you for a certain period of time, right? Now, the other area, depending on how you transact, another area where all these transactions are recorded is the bank itself. So if you've actually generated a check and this check has been cleared by the bank, of course that will now be recorded in the bank's ledgers. And that's the document or the ledger or the bank statement that we're looking to compare with. Now, if everything was fine and we all had a memory, an amazing memory for life, then we really wouldn't need a bookkeeping software because you pretty much use what's in your memory compared with what's on the bank. But that's not reality, and hence you need a system where you can download almost as a random access memory, something like a short-termed memory. You're going to be able to download all those transactions that were recorded into the system so that the system can help you with. It could be your extended brain, and it can help you with reconciling and matching the transactions that you have recorded with the transactions that exist in the bank. If there are mismatches, that's where the human brain comes in. That's part of the reconciliation process where you're now going to understand why the mismatch, and through this reconciliation process, ensure that you have a valid reason for the mismatch, or if you've caught it in time, you can make the right corrections to ensure that the records match. Okay? So it's a matter of having a process to record all these transactions that happen in your firm's life and having a methodical way of matching those records between this bookkeeping system that you have and your bank, and ensuring that you're on top of it on a regular basis so that if you do find any errors or omissions between these two different systems, you are taking proactive steps to correct them. Now, from a Law Society perspective, you are expected to provide a single reconciliation document on a periodic basis, which is traditionally on a monthly basis. So at the end of the month, a reconciliation document is generated that reconciles all the transactions that have been captured in that particular month, and it's matched between the bookkeeping system and your bank. Once you've actually done that, there are 4 pieces of information within a trust reconciliation report that are important data points that have to be tracked, measured, and reported. And those are the recording of the bank statements and balances. So if you're doing it for the month end, let's say the end of April, and you've received all these retainers and transactions have gone back and forth, you really want to understand what is the balance in my trust account. If person A gave me $100 of retainer, person B gave me another $200, I should have $300. But maybe I've already completed the work for person A, I've generated the invoice, and I have moved at the $100 from my trust account into my general account. So the $300 is now reduced by $100, leaving me with a balance of $200. Now that's the balance that we're talking about. Okay? Using 200 as my balance as of today's date, you're taking a tab of all the transactions that have contributed overall to reflecting that balance of 200. Okay? I hope I'm making sense. If you do have any questions, kindly use the chat window. We'll be more than happy to answer them as we go along. Now, the next data element that you want to capture in this trust reconciliation document are there any outstanding checks or deposits or bank errors? Now, of course, in an ideal situation, you wouldn't have this, but this is life. This is not ideal technically, and you're going to have to deal with these little nuances. So this is probably, one of those pivots that you have to deal with. Let's take a great example. Now you have person A giving you 100 that's been dealt with, person B giving you 200. Now let's assume your bank balance says that there's $400, whereas your bookkeeping software only shows you the 200, taking the same example that I spoke about. Now when you're reconciling, you're going to see that your bank balance for your trust account is 400, but when you go through your books, you're going to see only transactions that add up to 200, which means that the bank has more money than what your bookkeeping system says. And what that really means is there is an opportunity maybe that you have failed to record or keep a record of an additional $200 that has come into your firm, that has gone directly into your bank and it's been recorded, but for whatever reason, when it happened, you forgot or you did not record it into the system. A great example, someone gave you a retainer. You took that check right away because it's just as part of your discipline, and you deposited it in the bank, and now the bank knows that that 200 is available. Whereas you forgot to record it into your bookkeeping system. You forgot to add that client, add that matter, and add that new retainer to download what happened in your brain into that system. Okay? That's one example of an anomaly that can happen between your bookkeeping system and your bank. And that's an outstanding check. Okay? Now the other way can happen too. Maybe you wrote your client a check for a refund. Okay? And you wrote the check and you've given it to them. And you right away record that as a transaction that should occur in your bookkeeping system. Okay? Now let's assume you mail that, and for whatever reason your client has yet to deposit your check into his or her account. So what does that mean? That means that that $200 for, let's assume it's $200 that you wrote that refund, that amount would have not been taken out of your bank because your client has not yet encashed your check. But your bookkeeping system says that there's $200 less. Your bank says that there's $200 extra. Okay? So there's a bit of discovery that you have to do anytime you find a mismatch between your bookkeeping system and your bank. And it could be one of these systems. That would be an outstanding deposit. The third anomaly could be a bank error. Typically, as a legal professional, it's important when you start to create a bank account that you go speak with your bank and tell them that you're opening a trust account, and it is very important that any, let's say, bank fees or any financial fees that you may have not be taken out of your trust account. Because the trust account needs to be very pure, serene. It's about transactions relating to a client and a file, and that's the ins and outs. Okay? Because you need to be able to marry it or associate it with a legible file or client. Now, if the bank were to take $8 as the bank fee for that particular month, of course, your bookkeeping system is going to say there was $8 more, whereas in reality, your bank shows $8 less. If you do your reconciliation almost on a weekly basis, instead of doing it all at the end of the month, if that particular bank fee error occurred within the first week of the month itself, then you give yourself enough time before you generate that one report at the end of the month. You give yourself enough time to go speak to the bank and have them reverse it, which means they would deposit that $8 back in your trust account and now withdraw that bank fees from your general account. Okay? So those are the three different most pragmatic situations where you're going to see differences between what you have recorded and what you see in the bank. And we are capturing that. So if there are anomalies, and if it's too late to capture it, it's okay. You still want to say this is the reason why these don't match, and give the justification through this reconciliation report. Okay? The third item that we're capturing in this trust reconciliation report is a recording of all the client's trust listing. So if we say there's $200 worth of balance in my trust account, we want a list of every individual client who has contributed. What's the summation of individual transactions, if any, that lead to that 200? Okay, maybe 2 clients gave you 100 each. Maybe it was just a single client that gave you a $200 check. Just like how it shows here, we want to know the file, the client, the last date of activity, and what is the amount that the individual client gave you, and that's the outstanding balance. And the 1200 plus the 72 plus the individual 523 adds up to the 1700 that's outstanding in your trust. That's still sitting there, okay? And last but not the least, you're now comparing your total reconciled trust bank balance, so this is what the bank says, with the total unexpended balances per the client's trust ledger. So the ledger is maintained by your bookkeeping system. The bank balance is managed by the bank, and these two numbers need to match. So these are the 4 most important elements that you need to show in a trust reconciliation document. Okay? Of course, the simple answer to a question, what if I don't have any trust? Then you don't have to do this. This is only for law firms and legal firms that do exercise the trust account. Legal firms that do exercise the trust account to accept the retainers, right, money into your trust account. If you're actually doing the work, generating an invoice, and there's a leap of faith where you will get paid, that's purely a general transaction. Okay? Hope this was, I know I've taken a little bit longer than I would have on this particular slide, but I certainly wanted to emphasize those 3 very crucial, pragmatic situations where you could see the differences between the bookkeeping system and the bank. Okay? All right. Now, in comparison to trust reconciliation, of course, you must do a general reconciliation. It's a similar procedure. It's an accounting procedure that demonstrates and records all the transactions that, of course, have now touched your general account. When you first start off your legal business, you're going to go into a bank and you're going to set up a trust account if you need one, but most definitely a general account, an operating account for your business, right? So this is that account. You can see there are a direct difference between the trust reconciliation and the general is that it has 1 step lesser. So what are the 3 important data elements that are captured in a general account? Record of the bank statements and the balances, just like your trust. Okay, so you want to, of course, the balance of the bank is really the starting point that you're all adding up to. Just like the trust, you're recording any outstanding checks and deposits. So imagine the very similar situation with regards to your general account. A client provided you a check payment to be deposited into your general account. So you did the work. It was a $565 invoice. You sent the client the invoice. They mailed you $565, and there was a check. Okay, and you called them and they said, hey, I've already sent you the check. Now, knowing that that check is coming, maybe you were very proactive and you went into your bookkeeping system and you entered the $565 as client payment. Okay? But maybe the reality is, for whatever reason, you forgot to actually deposit that check in the bank. So again, I'm just telling the same story from a general account perspective. So what that means is your bookkeeping software would show an additional $565 compared to your bank, which still hasn't got that check and hence does not acknowledge that $565 your firm has, right? So that's, again, very similar to your trust account. That's an anomaly. You want to capture that. Likewise, if let's say we took the example of a refund of a retainer, maybe in this case you're giving them money back, or a great example is, let's say you've provided a check for a fee, and for whatever reason it was not in cash, or it's in cash in the bank and you have not recorded it, right? So there's could be any of those, but you can see the bank fees or the error is not something that we concern about here, because it's only the trust account that you cannot have bank fees coming out of, okay? Of course, the last thing is the comparison between the bank and the ledger. Just like our trust, the only difference, the major difference, is of course the bank errors in trust, and you have a record of all the trust listing, which is something that you do not have in your general reconciliation. Okay? Keep in mind the reconciliation process doesn't have to be a very complex practice or a process that you fear, or it's too convoluted in your mind and hence you get tired of even thinking about it. It can be a very simple process. It's just a matter of the transactions that your legal life has come across, and being able to tell the Law Society through these regular documentation that you're actually on top of your record keeping. That's the fundamental, I guess, science behind, or the method behind the madness of why they want you to do this, so that they know that as a community of legal professionals, everyone's doing the right thing to be compliant with the expectation of the Law Society. All right. Now, we spoke about how reconciliation, the report needs to look like, what are the data elements that both trust and general reconciliation reports carry. Now we're going to talk about how do you prepare for these reconciliations, and the key aspect, again, you see a screenshot of uLaw. Again, this is purely because we have access to our product. We don't have access to other products. You could take this, you can devise your own system, you can purchase another product, doesn't matter, but we're just going to be showing you what we've done with uLaw, okay, just as an example. Regardless of what system you use to do this, an important data capture is the date of the reconciliation. Okay, so you really want to capture on which particular day are you generating this reconciliation report. It's very important because all transactions on or before this day is what's being considered. Okay? So if, let's say you come to the end of the month, let's say April 30th is when you technically should have done it, but you've captured or you've generated the reconciliation report on the 26th, then of course the transactions, if any, that occurred on the 29th and 30th of April, okay, looking ahead, would not be part of this reconciliation report. It would be part of your May reconciliation report. So you can, as a firm, devise a particular cutoff date and make this as systematic and periodic as possible. You can decide whether it's the end of the month exactly on the last day of the month, or can it be a few days earlier. I think the Law Society does recommend that it's the 25th or the 26th is a good date, so that it gives you some room for any corrections that you may have to do before you revisit it at the end of the month. Okay? But you can decide what that time period should look like. So the date of the reconciliation, very important. We spoke about the balance. So step 2, really understanding the balance. Of course, you log into any of your bank accounts. If you're doing online banking and you choose a particular month, you would certainly see the balance. If you scroll down, whatever you see as the outstanding balance for that particular date range is what you have to input here. Step 3 is where, as a legal accounting software, uLaw keeps a record of all the transactions that you have recorded in this bookkeeping system of uLaw. You know, I mentioned about you recording this, so we've recorded these transactions, and technically you're looking at this transaction that we provide, or your bookkeeping system provides, you're opening up your TD, CIBC, or any bank that you work with, open their bank account either online, or you can print them and keep them in your hand. And now you're just comparing and making sure that within that date range, in this case it's a couple of years back, obviously it's a really old screenshot, as of that particular date, what are all the transactions between the bookkeeping system and the bank that match? Okay? That's it. You put the date, the balance, and you're matching the transactions. And when the records match and you've balanced it and you've taken care of the anomalies, so if you see something in the bank and you don't see it in your bookkeeping system, of course, you go back, add that item so that it shows up. Okay? And I know it sounds pretty simple and all of that, but the key to the reconciliation, and we repeat this in many of our webinars, is having a process and a discipline to capture these transactions. Do not leave it to the last minute for your brain to help you out with your memory of writing it down at the last minute. If a transaction occurred this Friday afternoon, at least by Saturday morning, find a way to put it into that system, whether it's an Excel sheet, uLaw, any other system. Okay? Make it a process, discipline, and if you need help, you need help. Be honest about that with yourself. If you can't afford it, then of course you got to build that discipline for you to help or get help from the family. Or if you can afford the help, then you pay for it and get the help done so that those transactions are being recorded as and when they happen. There are tools that legal accounting software provides that can also help you with that, and we'll kind of go through it doing the live demo. And this is where you can actually take the entire bank statement and import it so that you don't have to do all that data entry. You can basically just take all that in one simple migration into the system. Okay, so we'll talk about that briefly during the demo. The bottom line, as transactions happen, record it, because when you reconcile, those transactions are the key. That's the fundamental to that reconciliation document. Okay? All right. So how does reconciliation help you as a legal professional? Of course, it's a very important law society requirement. It's one of the fundamentals that allow you to define the actual numbers, because you have truly confronted yourself, for lack of a better term, and you've really matched. So there are no fake numbers here, right? Because you've really matched it with the bank. But fundamentally, it's meant to catch a couple of issues. One, I think we spoke about this. It catches all the transactions that you have in your accounting system or in this bookkeeping system we spoke about that do not match your bank records. That's very important. So if suddenly you see $1,000 in your bookkeeping system and you don't see that in the bank, then an immediate educated guess is maybe there's 2 or 3 checks either in your pockets or in your wallet or in your drawers that you have not yet deposited, right? Because the bank has not yet seen it, and that's why it's not showing that. The other issue, of course, is the reverse, where it catches all the bank transactions that you see in the bank, but you forgot to enter in the accounting system. So suddenly you see $1,000 extra in the bank, and your bookkeeping system doesn't see it. What does that mean? If it's a trust related, maybe you failed to enter the retainer. If it's general related, maybe you've already deposited the checks, but you've not accepted or shown that transaction of accepting that client payment in this bookkeeping software. Right? So fundamentally, reconciliation does allow you to ensure that you're on top of these 2 pragmatic issues that they may occur. It's just manual, it's human to have these issues. And of course, the third, from a trust perspective, we spoke about that, is ensuring that there are no bank errors. We often hear from our clients too that sometimes banks do withdraw bank fees from your trust account and they have to go back and ensure that it's not done again, but that happens as well. Now, if you've done this right, here are the benefits that you're going to get on. Number one is you're going to have your very clear conscience. You're going to feel extremely happy about yourself. There's no fear factor about, oh my God, I should have done my reconciliation. Now I have 2 months to catch up, and then it just adds up. So many times people just freeze because they haven't done it, and it's just that first step that's important. If you find a way to do this on a regular basis, you're not going to be sluggish. You're not going to have that problem. And on top of that, your accounting system is going to be up to date. You're audit ready at any given time. Because if you've done your reconciliation, that means the numbers are pretty much confirmed. Then every ledger, every journal, whether that's trust or general related, technically is a click of a button to generate when you're actually getting into an audit. If someone asks you for your March 2019 trust ledger, if you've done your March reconciliation, boom, you can just go generate that report and then provide it to your auditor on demand if it really comes down to it. You're also ready for filing your taxes with the CRA, because keep in mind, a very important aspect of firming up these numbers includes your revenue, right? Because let's assume you've got a general account. What that general account has is pretty much your revenue for your firm. That includes also HST. So if you firmed up those numbers, then you're pretty confident about the revenue, the expenses, and the HST, right? Because if you've not firmed up those numbers, and if you had that check that you still have not yet deposited and you still have not considered through this reconciliation process, then you're always going to be thinking about $200 short. So the reconciliation really truly helps you both from a law society perspective, but in a very big way helps you manage your finances of your business too. Okay? And if you're someone who's very nitty-picky about your numbers, someone who's on the bank accounts almost on an everyday basis, then all the reports that you're going to generate are going to have the utmost accuracy. And I started off with that, but I ended off with that again. You're going to have peace of mind, which is priceless. You're going to feel empowered that there's this one thing that, for whatever reason, you were not able to deal with. Having found a process to deal with it is going to give you that peace of mind, which I'm pretty sure is priceless for a lot of legal professionals. Okay? Now the question is, all right, are you audit ready if your reconciliation is complete? I mentioned this earlier too. And the answer is absolutely yes. And that's because if you have completed your trust and general reconciliation on that periodic basis, let's assume it's on a monthly basis, then a majority of the audit requirements they just turn into becoming reports, right? At least from a perspective of uLaw, in uLaw, at least you download them. Once you reconcile, you just click a button through the compliance panel and download them. If you're using a spreadsheet software, then you find a way to write a Word document that marries the templates provided by bookkeeping guidelines. If you're using any other software, then those softwares would provide you your own ways of doing this. But once you reconcile, those numbers are firmed up, then typically it's just a click of a button to generate a report. Okay? And that's why it should take you much lesser time to focus on being audit ready, because you're almost proactively being audit ready by ensuring two things: capturing data as and when it happens, and then doing your reconciliation on a very timely periodic basis. Okay? All right, so we spoke about the checklist, right? So from a audit standpoint, there's a lot of things that go into the audit. There's different documents that the Law Society may ask you to produce during the audit. But like anything else, everything starts with a firm foundation, having the right process within the firm to get it right from the get-go. So ensuring that your structure for your fees and your retainers come right from that retainer or engagement letter, right? Ensuring that you're capturing the proper fee structure to that retainer. If there's a contingency fee, or if it's a billable time, it's a flat fee, ensuring that that's all well defined so that whether it's you or someone else in the firm that's doing the intake of these clients, you're able to provide the right documents for sign-off. Once a fee structure and retainer agreements have been signed off, of course, you're going to get down to getting the work done. But a very important aspect is capturing those transactions, those dockets, those disbursements, generating those invoices in time. This is another very important step that all adds up to being compliant. Because if you do not have the process of generating invoices in time, you're not going to be able to move that money within the time period, right? So let's say, for whatever reason, you finished the work in March, but you did not, you were just, let's assume you were lazy, for lack of a better term, or whatever, something came about, and you did not generate that invoice in March, then of course you have to wait till April to recognize that revenue, to recognize that transaction, right? So you missed the opportunity to make that money in the month of March, for example. And it's not the real numbers that you probably want to reflect on a month-on-month basis. Same thing applies to expenses. If expenses occur, you definitely want to be able to capture as and when they occur and ensure that your bookkeeping software is very much on tab. Because when you look at your general reconciliation, right, if you're paying for your gas expenses, if you're paying for your law society fees, and if you're paying it out of your general account, of course you want to keep a tab on that. Application fee disbursements too are captured within the general account. Again, depending on what general account you use, whether it's your operating general account or you could have a credit card that you use exclusively for office expenses, right? Again, I'm not talking about your personal account. In this case, all of that is related to your business. So once you've generated the invoice in time, then the next step, of course, is ensuring that you're getting paid on time. If you've got a retainer involved, then it's far more easier because the ball is in your court to move the money from trust to general. But if this is purely general, of course, based on the days of sale that you've agreed upon, you will reach out to your client to ensure you get paid on time. As and when you get paid on time, you have to make sure that those transactions, those payment record keeping, are recorded in the system as well. And if you do all of this right, then of course you're setting yourself up for that single reconciliation step to be that much more easier, more comfortable, and you pretty much have confidence about each of those line items in the transaction. Okay? Okay. Now, then the time comes, the question really is, how much of time are you spending in managing all of this? And this is a bit of a sales pitch, not for uLaw, but more so from a software perspective. Just really a sales pitch or a pitch to motivate you to go research and find yourself the right tool, whatever that tool may be, to help you automate as much as possible so that you're not generating these documents manually. Okay. Not that you can do it. By all means, you should be able to do this manually if you have all the time. But in this competitive world, we want to, as much as possible, take the help wherever needed, of course, to automate business processes. That gives you consistent behavior. It also helps you be disciplined and on time. Okay? All right, so we're going to talk about why legal accounting really comes down to translating client information into ledgers, translating office expenses into ledgers, and this is something that legal accounting products exclusively offer compared to even, let's say, a general accounting software that may not necessarily touch upon a lot of your trust transactions. Okay? Okay, last couple of points, reiterating the same thing again before I jump into maybe a live demo and then take some questions. What makes reconciliation simple? Recording data as and when the event happens. Whether it's file related or if it's expense related. Find a process, find a discipline to do it. Okay? Ensuring that the ledgers and journals within the firm for all of the legal accounting touch points as much as possible are streamlined and are aligned with the bank through a more periodic reconciliation. So don't make it sporadic where it's done once a month and then you got to catch up for 2 months. Make it a process that you're going to spend that 26th to 27th. Hopefully it's a weekend that you can do this fast and easy. Through the demo, I'm also going to try and walk you through how through uLaw we made it a little bit more simpler where you can even do reconciliations on a daily basis, but it's not mandatory. But if you like, you could actually do that on a daily basis and very much be at peace on a daily basis if you like. Okay? Of course, legal accounting software gives you compliance, accountability, the ease of use, and it's very tailor-made for legal professionals. And it makes record keeping simpler, gives you that process by design to capture those events as and when they occur, and of course generate documents that are aligned with the compliance nature that are expected out of the different documents that you produce. And we at uLaw definitely do offer that as well. We're going to be recording this entire session, and of course I'll leave a couple of seconds for you to digest this. These are reference points for you, for a good read over a weekend. You can Google them, call them LSO or spot audit checklist, bookkeeping guidelines. These documents talk about the nature of the trust and general reconciliation, the expectation from a law society audit when it comes to reconciliation documents, and of course all of the other documents that follow suit, including the ledgers and journals, expense books, fee book, etc. Form 9As, there are jurisdictional as well. Okay, so if you want to know more about it, do visit the LSO's website. We may have to update these links because it says LSUC. It's now changed to LSO as Law Society changed it. And for our friends from British Columbia and Alberta and New Brunswick that have joined us today, you can actually Google them for your individual jurisdictions. You could say British Columbia, bookkeeping guidelines, and then they have a published PDF for that as well. Okay? For those who join us today who don't know who we are as a company, we're a Canadian company based out of Ottawa providing legal accounting, practice management, automated core form solutions for legal professionals exclusively in our country of Canada. And if you want to learn more about us, do visit our website. We offer a no obligation 30-day trial if you want to check us out. Okay, so keep those questions coming, and I'm going to now quickly shift gears from a presentation to my uLaw account. Okay, so uLaw is the cloud-based system, and what you see here is a legal practitioner that I'm using in my practice account, or playground account we call it, called Roger Moore. Okay, famous Bond. I'm going to quickly, in the next 10 minutes, walk you through a situation of, let's start with a blank reconciliation, what that looks like, show you what it is to add these transactions and how they immediately reflect, because as I said, the foundation of the reconciliation is the record keeping itself. Okay, so in uLaw, for you to reconcile your account, you're just going to go into accounts. We have these little quick short keys now that we've introduced, buttons that you probably use more often. Of course, the action button is the mother load in uLaw for all transaction data entries, but let's just start with reconciliation. And let me start with trust reconciliation. So it's as simple as clicking the button. We give you a little help file which talks about entering the date, remember to enter the bank balance, and please remember to clear the records as you recorded for the state range. All right, so I'm going to choose, let's say, the 26th of April. And you see at the bottom here that there are no transactions shown. Okay? What that means is that all the transactions, this is an amazing practice, all transactions have been reconciled. Okay? Or maybe there are no transactions to deal with. So let's assume that's the case. A brand new firm, no transactions, and let's add those transactions. Same thing for my general reconciliation. I'm going to choose the date. Again, a blank slate. You don't see any transactions yet. So now let us see how, as and when you enter data of these transactions that happen in your day-to-day life, how that feeds the reconciliation and how easy it is to generate those. Okay, so let's assume there was just one client and there are a bunch of expenses in the month of April that you have to deal with. Okay, so let's create that client real quick. So I'm going to just say, add to my clients. Miss Mandy Moore, who I met at a gym. I'm just going to put a quick address, mark the mailing address. Let's just move on. Okay. Quick and easy client intake. I'm just going to save that information so that it's saved in the cloud for me to retrieve that information. So, of course, I've created this client. Now I'm going to create a file or a matter. Okay. So these are transactions that occur in day-to-day legal firm's life. And I'm going to go ahead with creating a file for Miss Mandy. And for whatever reason, often I come across a very similar use case of a slip and fall or a fence issue. It could be any matter for that matter, criminal, family matters. So let me go ahead and create a matter by clicking on the matter button that you see here for Mandy Moore. If it's taking a couple of seconds to refresh, it's probably the combination of Join Me and the internet. So to keep this fairly simple, I'm just going to go ahead and I'm going to say, well, claims matter, or let's say fence issue, and mark this as a small claims matter. And for the purpose of the demo, just to show you the whole trust and general life cycle, let's assume we do sign a retainer letter with Mandy for a flat fee of $565, and we're going to accept that $565 or, from Mandy as a retainer. Okay, so you can generate all these documents. I'm not going to go there, but you do have a lot of templates that you can use. So let me go ahead and accept that retainer. Let's say retainer, new retainer, 565, check number 678, and it's going into my trust account. I can give them a receipt, but I'll just go ahead and enter that. So now you've entered this into the bookkeeping system. For the purpose of the demo, again, I'm assuming that the bank has recorded you actually have deposited into the bank because you have 24 hours, or rather that's more from a cash situation, but technically it would be great if you can deposit that right away into your trust account. Now let me go back into my accounts and show you when I do my trust reconciliation. You do see that one transaction right now. Before it was empty, but as soon as you've entered that data into the system, it right away shows you that this is one transaction that has been recorded. Okay? Let's move forward. Let's go ahead and For the purpose of the demo again, with time being very limited, let me go ahead and say small claims matter complete. I'm just going to say initial client intake. And this is something that all our clients sometimes do, but they want a quick and easy matter to be completed. Court appearance. Apply. And I'll toggle this into a flat rate and just say it's $500. Again, I'm assuming that it's in the province of Ontario. So friends from other provinces, do apologize, but you can change those tax codes jurisdictional in our settings, depending on which province you practice. Okay. Now, as I said, timely invoice. So let's go ahead and generate that. So invoice. I'm not going to do the pre-bill. I'm just going to go direct into the complete. I'll skip the preview. I'll say this is spring. I'm going to go ahead and click on the download button and generate this invoice. And because I've got a retainer and it's exactly for that amount of the retainer, I don't have to accept take payment. I just have to do a trust transfer. So download this invoice. I click on the question mark. It tells me exactly the amount that I have to transfer. So I'm going to assume I'm doing it in my bookkeeping software. And at the same time, I could do an online transaction where I open my TD, RBC, CIBC account and do the transfer for this exact 565. Okay. So now you're going to notice a couple of things once this money moves from the trust into the general account. Okay, so let's just hit on the transfer button. And I'm going to move the 565 from my trust account into my general account. And that's what's called the trust to general invoice payment transfer. This keeps you compliant because it does not allow you to move a cent more or less, exactly for the amount that you showcased in the invoice. All right, so it's moving into my Canada Trust. I could do a electronic fund transfer, and if you do that, let's say in the province of Ontario, for example, there's a Form 9A to fill out, where you can automatically fill that Form 9A. Okay? All right, so now let me go into my accounts reconciliation, and let's start with trust reconciliation. Now you're going to see two transactions. The one was the 565 that came in. That was the deposit. And now more recently, you see another transaction of withdrawal because you moved the money from trust to general through that transaction because of this invoice that you generated. This invoice enabled you to move, gave the authority to move that eligible trust money, and that was withdrawn from that. Okay? Now let's go into my general reconciliation. And you noticed earlier it was empty, but now you're going to see one transaction. And that transaction reflects the amount that was moved from trust into your general, and that's why it's a deposit. Okay? So let's assume that these are the only transactions from a flat file. Now I could have other transactions. So I could come in and I could import my bank statement. And this is where I'm working with, let's say, TD. I can download my April statement. And here are all my office expenses. Okay? So I can say it's an office expense that occurred on the 2nd of April. And let's just take another one, Law Society fees. This is a faster way that you can actually enter data instead of doing it one at a time. You're capturing it directly from the bank and you're importing it. The uLaw also knows that if it's Petro-Canada, it's kind of smart to know that it's gas expense. Technically, it captures the HST. All right. So with those three transactions, if I go into my, and I hope I'm at the right account, if I go into my general reconciliation, now you see there was one deposit of 565, but early on, coming right from the bank, you didn't have to enter it, took it direct from the bank, so for sure it's happened. And that's why we mark it in green, because you actually imported it directly from the bank. Okay? Now all you have to do, let's start with the trust reconciliation. Open up your bank, your real TD RBC bank account. Tell us the date when you're reconciling it. So I'm going to say it's the 26th. Tell us the bank balance. So your TD should show a bank balance. And this is a playground account. So there's a lot of data that's already sitting in this account over the last 10 years of my demo using this account. So that's why it's such a large number. But here's the true transaction. So technically, if these are the only two transactions that you dealt with in April, those are the only two transactions that you should hopefully see in the bank. Okay, if you see more, then you've got to adjust in the bookkeeping system. If you see less, you got to check your drawer for any outstanding deposits. How do you check that? So you say, all right, do I see 565 deposited on the 26th? Perfect. I see it in my legal bookkeeping system. I see it in the bank. Now, the one thing that can differ is the date, because sometimes banks take an extra day or 2 days, right? So maybe this is a different date. You can always change that date. The next transaction that you have is a withdrawal of 565. Do you see that? And automatically your reconciliation button pops up. Now you can do this even on a weekly basis by just doing a single preview, but I'll deal with it another time in a different demo because we're short of time. So let me just go ahead and generate that reconciliation report for the month of April with only those two transactions. And as that's running behind the scene, I'm going to do the same thing with my general reconciliation. Choose the date, have my balance, and if it's green, I know that it's already come from the bank, so I can almost blindfoldedly check them off. And did I have that deposit from Trust to General coming in on the 26th? And voila. Once the transactions and the numbers match, so the numbers, why that blue came about is because the outstanding balance in your bank matches with the expended ledgers. And here are the two where we calculate them. Okay, let me generate the general reconciliation. And here's the trust reconciliation document. Has the 4 items we spoke about. What is the balance? Were there any outstanding withdrawals or deposits pending? In this case, we didn't do that. There was no bank error. We spoke about, let me quickly highlight that. Step 3 was the recording of client's trust listing. So here are the trust listing, client's trust listing. So if there is a balance of $355,000, how did, what's the summary of where did all that money come from? It came from Ryan, Toby, Robert, all of them having those many outstanding balances, as I said, since 2015. Okay? That's what all added up. And then last but not the least, we have the comparison. Step 4, the trust comparison between the bank balance and the ledger. Let's look at the general reconciliation, which only had 3. So the closing balance, there were no outstanding withdrawals, no deposits. Here, this is something extra that we provide that is not necessarily required in a ledger, in a reconciliation document. Okay. Now, once you've completed these two, if I click on compliance, generating ledgers and journals is just a click of a button. If I do it for the month of April, and I basically generate and hit download. I did that for my general account. I do the same thing with my journals. And that's what I said. Once you've reconciled, generating these documents should be a breeze. Okay? And here are all the transactions that you show for the month of April. Including our Mandy Moore. And this is your trust ledger. Same thing with your general ledger for the month of April. For Mandy Moore, you had the 565. Come on. Okay? I know I've gone about 5 minutes over time, but hopefully this session gave you the confidence that the reconciliation, again, hopefully we demystified it, going back to our title. Today's session is for 1 hour of CPD professionalism credits, will be recorded and available to you as early as next week. And our idea through this webinar is to walk you through how simple it can be and what constitutes a reconciliation report, what goes behind that reconciliation report, which are purely the transactions that are captured on a timely basis, so that gets ledgered or recorded for you to then generate the reconciliation report and automatically enable yourself to generate the ledgers. Okay? So with that, I'll probably wrap today's webinar. I want to thank everyone who's joined me today, and hopefully this was a session that was meaningful and worth your time. We look forward to seeing you in our next webinar following Friday, the same 2 p.m. Thank you very much, and have yourself a wonderful weekend.